GNC is no longer just a specialty retailer. It actually is a global brand. Or at least that's what Ken Martindale, the CEO of GNC, on the recent earnings conference call. So this video, guys, is going to be covering the 2019 quarter 3 earnings for GNC. They just reported that this morning. The date is October 24th, 2019. Little pressed for time on this particular video, so I'm going to be covering some of the numbers pretty quick. Just get to some of the more important areas of the video in terms of my thoughts or just some commentary that was on the earnings calls and the earnings report. So I am going to be looking at my computer just so I can raffle off some of those numbers, get through those really quick for you guys. The 2019 quarter 3 revenue for GNC was around $499 million. That was actually down 14% year over year, or a difference of about $81 million. In terms of like what made up that loss year over year of the $81 million, there was about 3 buckets that were the most prominent. One was from the Nutra manufacturing business that is now a joint venture with International Vitamin Corporation. That affected the revenue $35 million. They had store closures with the store optimization plan affecting the revenue about $15 million. And then the Harbin Pharmaceutical joint venture did create about a $5 million loss in revenue from the Chinese international business. If we're looking at a gross margin number, it was 32.6. That was about 0.8% better year over year. I think incrementally that was down though from somewhere around 34% last quarter in quarter 2. Now to break up the numbers like I normally do with the domestic and the international numbers, the domestic revenue for quarter 3 of 2019 was $445 million. That was down 6.7% year over year. If we're looking at a same store comp numbers, you had 2.8% down same store comps on the domestic corporate side, and then you had a 0.8% negative same store comps on the domestic franchise side. Now, if you look at an operating margin for the domestic business, it was actually up 500 basis points or 5% year over year to 7.4%. And again, that was down incrementally. I think quarter 2 was somewhere around 10% on an operating margin. And if you guys have watched a number of my earnings report videos on GNC, you guys know that domestic has been a struggle for GNC. So domestic is both the US and Canada business, and then the international business, all the other kind of countries, have done extremely well for GNC lately. It's really been a bright spot for GNC, but unfortunately, the last 2 quarters have been down. Last quarter was mostly because of the Chinese business and the joint venture. But regardless of that happening again this quarter, the franchise business outside of China was actually down. And this is the first time I remember it being down in a while. So maybe a little bit alarming. I will kind of comment on a few of the individual countries that they did talk about on the earnings call. But the revenue for international business was 36.9. It was down 28.1% year over year. So a significant miss in terms of year over year growth. Like I said, the franchise business as well outside of the Chinese joint venture was down $9.1 million year over year. So a significant miss on that side. They talked about the Hong Kong business being a concern for them long term. They really were trying to search for alternate ways to continue to see some growth in that market. They were really struggling in terms of what they saw short term and long term with Hong Kong. And then they made some commentary just on some short term misses or challenges in 2 other countries, and that would be Saudi Arabia and South Korea. But they did see a few bright spots in terms of their international portfolio. The countries that they did mention were Guatemala. They also saw some growth in their India business, which they have a lot of really high hopes for. And then finally with the Philippines business. Overall, GNC is still very bullish in terms of what they believe the opportunity is for international retail kind of expansion. And they have a lot of different partnerships that are just starting in some key countries. They also have long-standing relationships with a lot of different distributors or franchises. And then they think there's a lot of white space that's still out there. GNC has commented multiple times that they believe there's about $1 million of intermediate term growth that's available across the world for the categories in which GNC sells. They say over the next kind of 5 years that they think they're able to capture a great deal of that new growth within the international markets. And honestly, I've seen a ton of the data around the compounded annual growth rates in individual regions and individual countries around supplements, functional CPG specific food and beverage items, and a bunch of other things. So I'm not necessarily saying that GNC is wrong in that number. I just don't believe that they're going to be able to capture a great deal of it, or just the amount that they believe they're going to be able to capture to kind of rev up some of their cash generation or free cash flow in terms of paying down some of their debt. I think that the international markets are going to react, or are already reacting, very similar to the domestic market. So you're going to see a fragmentation in terms of just brands, products, the channels in which they're purchased. So you're going to see a lot of direct-to-consumer. You're going to see a lot of marketplaces in each individual country. I don't necessarily think this is going to go back to a very consolidated, strong, few brands that are leading the markets like it was in maybe the 90s or the 2000s. So I don't necessarily believe in the story that GNC is telling in terms of the international opportunity in which they're going to be able to capture. I definitely think there's a ton of opportunity that's out there across the world for these categories, but it's just a matter of if GNC can really position themselves correctly in each region or each country, and if they think they're going to operate more of a hands-off approach with franchising and really believe that those franchisees are going to be thinking ahead of the curve and really be thinking bleeding edge. I'm not necessarily sold on that. So let's shift into digital, obviously another big, very important area for GNC. They've had a lot of struggles over the last few quarters in terms of their digital business, to the point where they've actually had some down year-over-year kind of growth numbers. They did see a change in that. There was a 11% year-over-year growth that was from a revenue base of $38.2 million. There might be some changing of the guard in terms of the digital business, because they did just bring in a chief digital officer from KFC that had, I believe, the same title at KFC. So he's probably getting in and doing a lot of changes, making some adjustments in terms of some basic tactics and things to get a higher conversion rate, or just get more traffic to the specific marketplace business or GNC.com. GNC also noted that they are starting to sell on the Walmart marketplace. That is potentially a very big business for GNC, as long as they know how to pull the different levers on the Walmart marketplace. I kind of called this in a few of the other videos that I put out recently, saying that GNC will figure out a way to partner stronger with Walmart. I know they do some stuff with Sam's Club already, but they need to do some things with the biggest retailer in the world. So if they are looking at themselves as a global brand and not just a specialty retailer, you're going to have to tap Walmart at one point or another, and this is kind of the first step in that. Now, you can't talk about Walmart without talking about Amazon if we're talking marketplaces, and the conference call does not really make me think that GNC has really figured out the Amazon marketplace yet. They still seem to be thinking they need to have a very strong partnership with Amazon. Even though they can control their own destiny on Amazon, they can do whatever they need to do to accelerate sales. Sellers by far are driving the growth on the Amazon platform. Those sellers rarely have any access or any partnership with Amazon, yet a lot of the sales come from on Amazon. So what I would say is have a mindset shift, GNC. Really focus on what you can control. You can control your own destiny and really pull a lot of different levers to grow on Amazon. So just kind of put your foot on the gas and make sure you're doing that. The other kind of point with Amazon, another press release that you guys probably saw recently, was that they announced they're going to have, I think, around like 1,000 locations where they're actually going to have pickup points for Amazon, and this is under their counter program, I believe it's called, under Amazon. So essentially you can pick up your Amazon packages at a specific GNC location. This on itself is something that has been done with multiple different retailers and different partnerships. It doesn't necessarily provide too much value to a retailer in relation to what the value is with Amazon. But what I'll say is there's a ton of different tactics and strategies retail-wise that you can make sure that you're getting a ton of value from this when somebody walks in your door. If you're providing an experience, one, somebody that maybe has not stepped into GNC in a while is going to be kind of wowed, and maybe you can get them back into your system. Two, if you are providing such an experience, you're going to have it as maybe a destination point for people to specifically pick up their package over maybe getting it delivered to their own houses. I will talk specifically about like the Amazon counter and GNC agreement, probably more in another video when I kind of deep dive into it more. I kind of just skimmed over some of the details, so I'm not particularly sure if it's a little bit different, if there's some nuances to that particular agreement over the other retailers that they announced at the same time that they're adding into their counter program. But let's kind of shift into private label for GNC. They didn't really call out any specific number in terms of the percentage of private label to branded product sales, so I'm assuming it's still about 53%. They do want that to grow about 2% year over year. I believe it's going to accelerate much quicker than that, and that's some things that I'll talk about later in the video in terms of their strategic partnerships. But GNC did throw out some numbers recently in a Jefferies investment conference presentation that they did put out around some of their private label revenue numbers and their specific brands. So I'll just run through those real quick. Both Beyond Raw and GNC Amp are a $135 million a year business. The GNC Total Lean business is about $80 million, and then Body Dynamics is about a $60 million business yearly. Outside of just those private labels, they did specifically talk about a few different innovation things around Slim Bands and then another ingredient I believe they're going to be adding into some different products. What I was most excited for them to finally call out and announce in terms of an earnings call was their energy drink, their private label energy drink offering that is coming out or has already come out. I've seen it across some pictures and things with some of the franchises, is their Mad Pony energy drink. Now, on itself, I think it's a great idea. Obviously, I don't know what it tastes like, and that is the main driver for energy drinks. You have a purchase criteria that is taste forward, it's not function forward. So regardless of what kind of nutraceutical ingredients they have in there, it's still very much taste forward. So I'm gonna have to probably get my hands on some of those and try them to make sure that it is gonna meet the hurdle or the expectation of consumers at this point against the competitors, which very competitive space. If you guys do follow that, or you guys just follow some of my videos that I talk a ton about the energy drink, performance energy drink space. But GNC specifically commented around it being a lifestyle brand, also being very much focused on Generation Z and millennials. I'm not sure if they just wanted to throw a bunch of buzzwords against the wall and just want everybody to be wowed about that. I have yet to see any activity that would deem it a lifestyle brand or deem it anything more than a private label offering to grab some sales from Bang or C4 or a number of other energy drinks that they do offer in their coolers. But I won't comment any further on that until I kind of see some things in market to maybe make me change my mind around them just kind of throwing out a term like lifestyle brand. Now, the headlines that you're going to see constantly across all of the major news channels, and as always around the major news channels, around these store closures. That is what always seems to catch people's eyes, and that is clickbaity enough for all of the major news channels to do that, even though they generally have the information in the story incorrect, because they don't understand that that actually has a ton of positives. It's not just a negative, even though I understand people are losing their jobs, and that in a vacuum is very bad. But in business, there's always a plus and a minus with every decision. GNC, on a year-to-year basis, did have a reduction in their store count of 762 stores. That is from a bunch of different buckets, primarily from two buckets. You have like the franchise or you have the domestic corporate locations, which they're on track this year to close about 300 of those, and then over the next 2 years, they're going to close another 500 or 600 of those, a lot of them coming from the mall locations. And then they also have like a ton of like the store within the store concepts that are closing because of Rite Aid and their kind of issues with their business. But they mentioned again around like the mall traffic really being a struggle for them. Mall revenues are down. The economics of the stores just really don't make much sense for them in a lot of cases. But more importantly than the economics, and maybe not making all that much sense, is that these short-term leases that are in malls are really effective for them on a cost reduction standpoint. So regardless of maybe it is something they'd like to keep around, they are in kind of a back against the wall kind of a situation right now. They're going to pull the trigger a lot quicker to close stores. It's not going to be something that from a mall location, if the lease is up soon and they're on that decision of like, do I or don't I close this, they're going to close it. It's going to be one of those things. So The mall locations, though, are usually a much higher revenue. They also a lot higher cost. So it's just one of those things they're looking at from the store optimization plan, and one that they're continuing to look at and highlight as they're planning to close about half of their mall locations. Something specifically that they noted in the earnings call, which was kind of a little bit alarming for me specifically because I would have thought this number would be much higher, is that when they did close store locations within a region, they only recaptured about 30% of those sales. I believe that number should be much higher. I mean, specifically, if you're going to close stores and you're going to have less stores in the metro area, you're still essentially picking ones that are going to service the same people through either the traffic in the store or through online sales. So with them only attracting or recapturing about 30% of that revenue, makes me think that maybe there's some misses from their communication strategy or their marketing strategy, letting customers know, hey, we're not there anymore, but we have all these other locations. We have new digital omni-channel options for you, and here's some coupons and things like that to make sure you're still in the system for GNC, and they're apologizing for the inconvenience that might be caused by that location being closed. Because customers have a ton of options now in terms of where they can buy supplements. They no longer just have to go to GNC or go to another specialty retailer like the Vitamin Shop. They can go to their local grocer, they can go to their local club store, they can go to their local Walmart or Target and pick up substitute products. They might not be the same products, they maybe are of a little lesser quality in some cases, but for the most part, basic lifestyle mainstream consumers do not understand the nuances of products in a lot of cases, so that is a substitute for what they're looking for. A protein powder is a protein powder, a pre-workout is a pre-workout, a fat burner is a fat burner, a multivitamin is a multivitamin. So GNC is going to really need to look at that because these customers no longer have to stay within the system if you inconvenience them, so you need to really focus on the communication and let them know, hey, we're not going to inconvenience you because we have all these options and we want to keep you as a loyal customer. Now, one of the biggest areas of growing a global brand and not just being a specialty retailer is that the GNC name needs to transcend a retailer, needs to be also thought of as products and be global. And this is something that GNC is focusing a ton on. I've put out a video specifically around some of their strategic partnerships, the outside the four wall strategy. This is continuing around GNC. They are kind of talking about it even more now. You are seeing a ton of different strategic partnerships with, Dick's Sporting Goods or Albertsons or Hudson News, 7-Eleven. I believe there's some stuff now at HEB. They have existing partnerships with the military. They have existing partnerships with Sam's Club that I talked about. And then with Rite Aid, their longest kind of standing partnership with Rite Aid. Now, Rite Aid is a little bit interesting because they did just re-sign a contract, but to my understanding is not really out there for viewing, and if it is, I probably just skimmed over it and missed it, but there was some contractual changes with the contract that did make this like outside the four walls strategic partnership really start to move quick and surge, and that was around a clause in the contract that no other strategic partnership retail offering outside the four wall type of offering with like wholesale private label products could be within 1 mile of a Rite Aid location. So there was a radius restriction of 1 mile. So being that Rite Aid has a ton of stores, there's a lot of issues in terms of where GNC can and cannot put other products with a partnership. So that now is gone out of the contract. So GNC is now open up to just be in partnerships with a ton of different people. So it really accelerates this global brand idea with their private label products. They also had another contractual change with Rite Aid, and that was around like consignment goods. A lot of the products that were in Rite Aids were on consignment. I think around $4 million or so was just out there. Because of that change and now them going to a traditional wholesale agreement, that number did come off their wholesale revenue number. I think it's going to be something that cleans up pretty quick. It does help them going forward with like free cash flow because they don't have to just put out $4 million, $5 million, whatever it is, out into Rite Aid stores, essentially like free filling for them, and then waiting for pay on scan from them to get whatever that cash cycle back in terms of payment. It is pretty interesting to see that GNC does that with Rite Aid, because they do that with a ton of brands. Pay on scan is something that people hate at GNC, so it's interesting to see that they get a taste of their own medicine with Rite Aid, but they have cleaned that up recently. Maybe then it also will clean up some of that on the brand side, but with GNC having some cash issues right now that I'll talk about right now, I don't believe any of that pay on scan things are going to be going away for brands. So unfortunately, brands, you're going to have to continue to deal with that if you are somebody that doesn't have a lot of leverage with GNC. Now, with the liquidity debt kind of conversation, it's something that I'm continuing to kind of do with these videos, these quarterly earnings videos, because I think it's an important part, something that is constantly going to be at the forefront of conversations when you're going to hear about GNC. And they kind of have a few different drivers that are kind of working here. You have the store optimization plan that's obviously having a lot of effect on some of the liquidity and cash flow. You also have a cost reduction plan that they're working on that is ahead of schedule right now. I believe in 2019 they're looking at $29 or $30 million in terms of what they're going to have in a cost reduction. I believe over the next 2 years that's going to be somewhere around a $50 million total. They're ahead of both of those numbers, so they are cutting costs very quickly. The other number that you're going to be paying attention to a lot is around cash and cash equivalents. What does GNC have on the books? Right now they have about $122 million in cash and cash equivalents. And then they also have an untapped revolver that I believe is somewhere around $81 million. So in total right now they have an available short-term cash of somewhere around $200 million. And that number is important because they do have some debt that is due soon. And that's somewhere around in May 2020. I think there's a trigger date that if it's not below about $50 million or so, there's going to be some penalty. Currently, that number I think is somewhere around $150 or $160 million. So they are still covering that. They have 200 on the books. They can cover that more than paying it down to $50 million so they don't incur any other penalties. But this is kind of small comparable to what's due in terms of March 2021. And you guys hear me talk a lot about on social media posts when people talk about bankruptcy with GNC and all those different things. I always say early 2021 is when you really have to kind of pay attention to in terms of them being insolvent. And that's because they have a very large debt payment due of about $450 million. And at current pace, they're going to need to do a lot of crazy things to really be able to pay off that money. So the company has been reviewing a ton of different refinancing options. They've been tapping some of their debt and equity holders, very large debt and equity holders, to figure out some different options. So this is coming from both US and Asia, and that's what kind of sparked recent news around the Harbin Pharmaceutical buyout. And Harbin Pharmaceutical, obviously being their biggest shareholder in terms of about 40% or so, they obviously have a lot of leverage and a lot of pull, and I believe there's some different board seats and things that they have within their contract when they made that investment of $300 million with GNC that closed earlier this year but was announced late last year. So there's a ton of different conversations happening in terms of long-term financing options for GNC. Can they, again, maybe extend out that loan if they're going to have some really good, strong free cash flow story? Are they able to maybe go private with a buyout? Are they looking at some other investors with strategic retailers or other private equity? Ton of different options I think they're looking at right now to try to figure out what they have available at the table, and they're able to make those decisions. But to transition just at the end into just a conclusion, I feel for Ken Martindale. I understand he's got a lot of pressure, a lot of challenges in front of him. Definitely don't want to diminish any of that. He is running a $2 billion global retailer that has a lot of ambition, a lot of people pulling on them in different directions. What I'll say is that public markets are not a place for a company that is not growing, and GNC is not growing right now in the top line. They are struggling right now with reestablishing the revenue. They're trying to go through a restructuring plan. They're trying to reinvent themselves through a bunch of different strategic initiatives, and being in the public markets and having a quarterly demand to meet certain expectations, it stunts your long-term ability to change culture, to change the business how it needs to change. You have a culture at GNC that's very much short-term thinking, very much sales commission driven, and a lot of things that are getting pushed downward to create revenue, where they need to be thinking more about long-term customer focused value generation to really establish themselves as a retailer and a brand that is going to provide a very extensive experience that customers can't get anywhere else, and you really can't invest or change a lot of things as quickly or as largely with being publicly traded. You need to be private in this particular phase of your business, reestablish yourself, make sure you can get aggressive with a lot of things you're doing. You can really focus on spending money aggressively to change your business quickly, because unfortunately they're kind of in this hamster wheel of short-term thinking and hoping that maybe they can get something long-term working, but a lot of the stuff they are focused on long-term is really just like innovation to parity. They're really just catching up to retailers in terms of what they've been doing over the last couple of years. They're not really getting ahead of any of them in any way. Hit on a bunch of buzzwords that a lot of the other retail businesses are focusing on right now. So you have them adding features, and I want to applaud them for at least adding them, but you're adding these features like micro shipping point, click and collect, subscription model, different capturing of data through loyalty programs or through some different personalized nutrition offerings like GNC for You, which I talked about in the last video extensively. If you guys have not watched that video, when you're done with this one, jump over that. I talk about that for about 15 minutes just around the personalized nutrition gimmick, or what personalized nutrition could be in the future that's extremely disruptive. And outside of that, they've added a ton of other maybe tactics and strategies, initiatives, and things that they're very proud of. And honestly, again, I applaud them for making changes, trying to figure out what patterns and sequences are going to work well right now in 2019. But I've been talking about this and calling for this since 2016. If you guys look back at some of the things that I talked about in 2016 in written articles and things, you guys see that I was talking about a lot of the things that they are instituting now in 2019 3 years ago, when it was bleeding edge, when it was something that could create seismic sized changes in the business. But unfortunately, GNC was a little bit slow to move, and now they're just kind of innovating to parity when they need to be getting ahead of the competition again, because they are in a much stronger competitive landscape than they were back in 2016 when a lot of these changes should have been going in place. Now you have supplements and sports nutrition products and all the other kind of things that GNC sells across all kinds of different retail channels that are readily available, and GNC is really going to have to put their game face on, because the battle in which they're in is not getting any easier. It's just going to keep getting harder. So you got to kind of dig in and really kind of swing for the fences here to meet the never-ending changing demands of the consumer. It's not easy to be a retailer today, and GNC needs to accept that, because consumers and customers are more fickle than ever, and anybody that is crazy enough to wake up each day and take on that challenge needs to get their mind right. Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly, and if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.